How's it going, guys? My name is JSESTOCKREVIEW and welcome back to Met Eish. Today we are going to have a look at Purple Group Limited, and this video has been in the works for some time, but I decided to wait until after the year-end results for 2021 came out and then give myself a little bit of time for my emotions to cool down a little bit before putting the script together so that I can try to be as impartial as possible when looking at this company, as I am a Purple Group shareholder, and that will allow me to once again remind you that I am not a financial advisor, this is not financial advice, and this is not a blank cup. There are only a few days left to sign up for the Tenacity Leather Studio pre-launch mailing list, with the store going live on the 25th of November. That is this week, Thursday. So, click the link in the description down below to qualify for your mystery discount between 10 and 30% off your first purchase, with one lucky person getting 100% off their first purchase. Tenacity Leather Studio is based in Bella Bella, and their products really speak for themselves. Each piece is exquisitely made from premium quality, full-grain leather sourced from one of South Africa's oldest tanneries, and each item passes through their hands as it comes to life. To check out their beautiful line of premium leather products, check out Tenacity Leather Studio on Instagram and Facebook, links in the description below. Purple Group Limited is a South African financial services company which owns and operates online investment platforms as well as an asset management business, and is best known for its 70% share in the online stock brokerage site EasyEquities. But there is more to Purple than just the one platform. Or is there? Despite the majority of people, myself included, only becoming aware of the company in the last 6 or 7 years, the company has over 20 years experience in the online trading game, having been incorporated in 1998. The company operates in 3 segments: 2 wholly owned, GT247.com and Emperor Asset Management, and 1 joint venture with Sanlam, in which Purple has a 70% stake, the platform loved by millions of South African retail investors, and the segment keeping the rest of Purple Group afloat, EasyEquities. Looking at each company a little closer, GT247.com is an online trading platform offering customers in over 88 countries access to over 65 currency pairs, and was the first CFD or contract for difference provider in South Africa. The business operates in a highly competitive space and is currently not doing too well, with revenues down 56% and a year-end loss of 8.7 million rand last year. The revenues of GT247.com declined sharply in 2016 and were slowly picking up, but they never got back to those 2015 highs until this year, where they were down a lot. This was the first year that the company was loss-making since at least 2015, but their earnings during that period have always been rather erratic. A glimmer of hope is that the company's costs have generally been decreasing since 2015. On the asset management side, Emperor Asset Management has been around for about a decade, and despite winning a Raging Bull Award in 2020 and increasing revenue by 37% last year, only contributed just under 1 million rands profit to the group. So where does the rest of Purple Group's 82-odd million rand profit for 2021 come from? Apart from a 50 million rand valuation write-up from the acquisition of Easy Cryptos, which increased the annual profit by more than half, the remainder of the profit came from Purple's crown jewel, its 70% stake in EasyEquities. EasyEquities aims to democratize investing by removing barriers to entry, which have kept the investing universe as an old boys club and out of the reach of the average person, by making the process of owning shares cheap and easy. By selling fractional shares, the company is able to radically reduce the entry point of share ownership of any of the companies on the platform to just a few rands. For example, 1 B share of Berkshire Hathaway is almost 4,400 rand. But on EasyEquities, you can buy a tiny piece of that share for as little as you want, and still benefit from having Warren Buffett, the greatest investor of all time, manage your money. EasyEquities is split into 4 subsidiaries. EasyEquities International, a wholly owned subsidiary of EasyEquities, which is based in Ireland and operates all of EasyEquities International businesses, starting so far with Australia. EasyCrypto, a 51% holding EasyEquities has in the company formerly known as DCX, which specializes in crypto assets. Easy Properties, which has taken the EasyEquities fractional ownership model and applied it to residential real estate in partnership with Johannesburg-based property developer Narrative. EasyEquities has a 49% stake in Easy Properties. And Rise, retirement, investments, and savings for all. A one-stop retirement shop for all your old age money needs. EasyEquities is probably the closest thing we will get to a Tesla-like cult company in South Africa. It has grown in leaps and bounds since launching around 2015, and the majority of this growth comes from referrals. With the company boasting a cost of acquisition, which is how much the company spends for every new customer, of 50 Rand per new customer, which is 2.5% of the industry standard, meaning on average, the rest of the financial services industry is spending around 2,000 to 2,500 Rand per new customer. This clearly gives Purple a massive pricing advantage and has helped to build the EasyEquities tribe into almost 1.2 million registered accounts on the platform today, with the platform gaining roughly 60,000 new customers every month. EasyEquities saw a pre-tax profit increase in the last year of 691%, rising from 12.4 million in 2020 to 98.1 million in 2021. So EasyEquities is clearly doing heavy lifting for all the areas in Purple Group where the rest of the group is lagging. All of the excitement and hype around the stock comes from the excitement and hype around EasyEquities, and the company has stated that it is looking to launch a few new products in the near to mid-term future. And every time they have launched a new product or partnership in the last year or two, it has been met with massive increases in the stock price. Some of the more concrete new products are EasyEquities adding the UK and European markets, although the timeline isn't quite certain yet, as well as adding further features which the community has been asking for, such as stop losses. EasyEquities International is looking to spread into Kenya, the Philippines, and Eastern Europe, probably through Poland, while EasyCrypto is looking to launch new crypto assets, including new indices and allowing the purchase of individual coins. Easy Properties is expanding into other real estate sectors, such as commercial and industrial real estate, as well as international real estate offerings. And Rise, your one-stop retirement shop, is looking to launch Easy Insure, so that all your retirement and insurance needs can be met in one place, taking a swing at the old establishment like Old Mutual and Liberty. Some of the other new products that are in the works are Easy Lending, a venture capitalist style feature that will allow users to pitch for funding and fund projects on the site to launch their businesses and startups, which is really exciting since the EasyEquities community will effectively be able to buy into seed rounds of startup companies. Easy Trader, basically, as the name suggests, enhancing the trading capabilities of the platform, but I'm not quite sure where this leaves GT247.com, and Easy Retire and Easy Asset Management. Again, as the name suggests, quite self-explanatory, but I don't really know where that leaves Emperor. There's no word on this yet, but I would love to see an easy offshore bank like Easy Bank. Easy Bank should be a thing. Charles, if you ever see this video, please make Easy Bank a thing. I would be there like a bear. I would join Easy Bank in a heartbeat. All these new products and geographical expansions will require capital, and Charles Savage, the CEO, has already stated the company's intention to raise capital in order to fund this growth, although he didn't say whether that capital raise would be done in the form of debt or equity. So there might be some possible further shareholder dilution in the not-so-distant future. Speaking of Charles Savage, he is the group CEO and the founder of EasyEquities. He's been the Purple Group CEO for 14 years, and the management team has an average tenure of just under 9 years, with an average board tenure of just over 5.5 years. The board includes some big names in South African business, such as Happy Nchingila and Mark Barnes, who was the founder of Purple Capital. The board and other insiders currently own a little over 4% of the company's shares, but there has been a fair amount of insider sales in the last year, with Mark Barnes in particular selling out of a large portion of his holding. On the topic of shareholders, apart from the 4% held by insiders, a massive 56% of the stock is being held by the general public, with the remainder of the shares being held by institutions and private companies, and the total number of shareholders is currently sitting around 49,880, 49,500 of which are retail investors like you and me. This being said, there has been a decent amount of dilution already, with outstanding shares growing by 22% in the last year. If we have a quick look at a SWOT analysis for Purple, I would say that Purple's strengths are its moat in terms of its pricing advantage provided by its low cost of acquisition. It also has a very strong brand in EasyEquities, and its partnerships in the last few years have enhanced the reach of the platform to almost every corner of South Africa and its neighboring countries. The leadership is another major strength for the company, with a highly competent board and a clear vision. Charles Savage is extremely likable, and his passion for the company shines through. He has built a cult of personality company where the personality is the company itself, not just one individual. EasyEquities has taken on a life of its own in many ways, and it continues to change and evolve as the users, a lot of whom are investors in the company, change and evolve. The company has really lived up to its goal of democratizing investment, starting with itself. Now, there are a few weaknesses, and they would be the inability to liquidate a large number of its long-term assets in the event of liquidation, with the company currently listing a massive 80% of its non-current or long-term assets as goodwill and intangibles, mostly customer relationships and softwares developed. This equates to roughly 47% of total assets, and even if we compare this figure to some other SaaS companies we own, such as Cloudflare, this percentage is high. As such, I have done all my calculations twice, once with and once without the goodwill and intangibles. Access to information could also be better, with there being a serious lack of info on the company in general available on the website. And another weakness is the app. EasyEquities is great. The app is great, and it does what it sets out to do, but it is still extremely limited in terms of functionality, the company info and analysis available on the app, and the number of companies users have access to. If an investor wants to invest in their favorite Latvian milk producer, EasyEquities is not the platform to do it on. It's also not great for day or swing traders, and although GT247.com does exist, the market is clearly more aligned with the EasyEquities brand. And I think this is something that the management is aware of, hence the efforts being put into the new Easy Trader product. As things stand, the opportunities for Purple Group are the opportunities of EasyEquities. The new products and geographies we touched on earlier all offer some very exciting opportunities. The company is also putting a lot of effort into expanding the capabilities and offerings of the EasyEquities platform without increasing the costs in a massive way. And that leads me to one of my biggest concerns, and a threat that I have always had regarding EasyEquities in particular, and Purple Group by extension. Its image as a beginner account. The idea that investors will start with EasyEquities before moving to a real account, the likes of which are offered at high fees by traditional banks. But they do seem to be working on changing this image through adding more features. And through the deals it has signed with Bidvest Bank and Discovery Bank, it is showing that the company is expanding its focus in an attack on the Investex and RMBs of the world. Another threat, of course, are macro factors facing the country as a whole, such as unemployment, especially youth unemployment. If people are struggling to feed themselves, then investing is going to be one of the last things on their minds. Looking at the financials, that 50 million rand write-up has been all most people have been talking about. That and the high price at the moment. Price to earnings is not a very good metric to use for such a high growth company, since most of the earnings are going to come from quite far in the future. So the PE will always be high for a high growth company, and that makes it kind of useless for us to look at when trying to value such a high growth company. That is where a DCF or discounted free cash flow is so important. That being said, Purple is currently sitting on a 54 PE, which is actually 8% lower than where it was when we first bought this share, trading at 91 cents a year ago. Looking at the share price of 2 Rand 40, especially when your average purchase price is under 1 Rand, does make it seem like it is incredibly expensive at current levels. But I don't think we'll be seeing the share trading at a share price around 40 cents again anytime soon, if ever. The earnings per share is up 190% from last year, and this is made even more impressive by the fact that it comes together with a 22% increase in the number of shares that we mentioned before. The balance sheet is looking good, with current assets able to cover the current and non-current liabilities combined. And the company also has a debt-to-equity ratio of 0.69, which is the healthiest it has been since 2018. And although the company has stated its intention to raise further capital, and it's increasing debt over the last 2 years, net debt, which is the total debt minus cash and cash equivalents, is actually down and has been decreasing every year since 2016, except a once-off in 2018. While operating expenses were up 30%, the operating expenses per active client was actually down by 47.9% to 205 Rand per client. And looking at a few other metrics, the company has a price-to-book ratio of 6.2 and a price-to-sales of 13.6, both of which are quite high. And when I ran my extremely conservative DCF without the fair value adjustment, I got a fair value per share of 1 Rand. But I'm talking super conservative. Purple has had an EBITDA increase of 190% last year, and the historical annual growth is 63%. And in my DCF, I am assuming future growth for the next 5 years of half the annual growth rate. So I think it is really very conservative. If I assume future growth is at its current rate, I get a 2 Rand per share valuation. So the price at 2 Rand 40 is high either way. That being said, it is actually cheaper now than it was when we bought the share a year ago, and I don't regret that decision at all. Much like Tesla, the company has its hardcore supporters and believers. It has done amazing things for the South African investing environment, and I only hope it will continue to grow from strength to strength. In the end, I really like the company, and I believe if you buy it and keep it in your bottom drawer for the next 10 to 15 years, you will be very, very happy. Once again, not financial advice, not a financial advisor, and not a blank cup. Purple Group meets 5 of our 5 criteria, which we look for when we buy a stock, being revenue growth, earnings growth in the form of EBITDA, strong free cash flow, low debt, and if we look at the PE, it is cheaper now than it was when we bought in a year ago. So 5 out of 5 for Purple Group. And just a fun fact, in the last financial reports, Purple Group has a list on page 107 of the countries that each and every shareholder in the company comes from. And not only do we, Met Eish, appear on this list as a separate line item representing Taiwan, hey, Although they got the number of shares we hold wrong, and it might actually not be us, but I'm going to claim it anyway. There is one investor with around 2,000 shares from the Democratic People's Republic of Korea, or North Korea. Now, I'm not saying that Kim Jong-un is definitely an investor in Purple Group. There's no evidence to suggest that. But there's also no evidence to suggest that he isn't, so just a random fun fact. So, what are your thoughts on Purple Group? Let us know in the comment section down below. And while you're down there, hit the link and register for Tenacity Leather Studios' launch mailing list to claim your mystery discount. You can also follow Money Met Eish on Instagram and Facebook and everywhere where Money Met Eishes are. Thank you and good night.